Okay, guys, I just want to go through this V-chain trade that we sent out to the VIP, and how we caught it, and just sort of the breakdown on the strategy that we use, so you can get an understanding when you are following the signals, what strategy we trade, so you can follow along and master the system yourself. So first things first, we basically had this 8-hour whale block we had marked up previously. This is the last zone before this massive sell-off. So when we zoom in on the 8-hour, we have a nice whale block here that we've marked up, and we've waited for price to come into that zone. Once we got the alert on that zone down into the 4-hour, I just want to bring your attention to the imbalance in the market that's come up here. This imbalance always gets filled in the market. Basically, the imbalance is just a section of the market that is there was only buying present in the market at that stage. So there's no wicks, there's nothing to cover that section of the market. So we know we have a bias that we do need to come and fill that imbalance at some stage. Jump down to the hour. So we got this tap, alert went off, triggered our alert for our higher time frames, so we can start looking at the market. We did jump in. We did grab a little short position here, which was literally just this accumulation zone. We had the lower time frame break of structure through here, down to the downside, and then we just marked up our lower time frame whale block, which is our last buy candle before this big drawdown. We came mitigated it and then short down. I think we picked up 1.65%, and then we came back and we broke even. We took our 1.65 and then got stopped out at break even. So we continue, remembering we're in this higher time frame whale blocks. We still have a bias of this market can turn. We just need to follow through with our rules and trade our rules essentially. So what we can see when the market does run up, I was looking here, we did get this, if you follow market structure, we did get this break of structure here. Let's mark that up. We did get this break of structure here, which we came up, created this imbalance in the market. Didn't quite fill the imbalance. We like to fill at least 50% of the imbalance in that section. So we did tap the 50 zone of that imbalance. We came up, we had another break of structure here. So we're following we know the market's getting weaker and weaker. We're getting these break of structures. We did have this big lower time frame whale block, this 15-minute whale block. Purged this liquidity through here. Came up, tapped our 50% imbalance, came through and broke structure. So this is when we actually had a look to try to get into the market here, was on the mitigation of this this lower time frame whale block. So just going back, we're in a higher time frame zone and we're scaling into the lower time frame whale blocks. So we've got this lower time frame whale block. We get this break of structure here. Market's weak. We're building these inducements. So these zones here, this is just build up of liquidity through here. There's liquidity pool, liquidity all sitting through here that likes to get taken. And what are our rules? Our rules to our execution plan is: have we purged liquidity into the zone? So this is our lower time frame zone. Have we purged liquidity into it? We have. Has imbalance been filled? Lower time frame, I think it was on the 5-minute. We'll have a look at that in 2 seconds. We'll have a look at some imbalance in here. So let's jump down now from the 15 into the 5, which was our entry time frame, and see what we can see. So have we purged liquidity into the zone? Yes, we have. Imbalance. We've come through. We didn't quite get to the 50% of our imbalance. But we did take the highs here, we did take the liquidity, and I do have marked up our trade invalidation zone, which is above this swing point. So if we do come above this swing point, trade's invalid. But since we're getting these break of structures, I can my probability is this is the high. So I did jump in on this trade, even though we didn't fully sweep our liquidity, our imbalance, sorry. I was willing to get in on this trade because what we did have was this nice RSI divergence. So we had price is still making higher highs, but when you look at the RSI, the relative strength is moving down. So the momentum is actually shifting to the downside. So this was a great sign here. We also had this massive wick, and the sellers started coming into the market here. So we know that was a sign of weakness straight away. Then they obviously came and just took a little bit more liquidity above this high of anyone that was trying to short it with a tight stop loss. So we did jump in at the market on a 5-minute Horiana candle inside this zone, which I'll jump down and show you as well, so we can go through our whole strategy here. Once we got that divergence, market swept the tiny highs, we then enter on this shaved Horiana candle, which ran us down. Let's put the position in. We enter on that Horiana. I had the trade above the highs there, and then we had that running all the way down. But what we did do is I did hit a TP1. At 1 to 2, and I did move stop loss to break even and did get stopped there, but that was slightly frustrating. So I monitored the market. Let's get out of Horiana's. Monitored the market here and realized that we are breaking structure again. Through here, we broke structure. Through here, we broke structure. So what can we do? We can mark up our zone again. I think it was on the 15-minute. Mark up our last buy to sell candle, which was this one here. So last buying pressure, lower time frame whale block. We came and mitigated that once again, and we entered short. We entered short once again off that whale block there. Stop loss above the highs again, and we ran that one down, which I'll go through in a second. But just to go through it once again. So we're in this higher time frame, and it's an 8-hour whale block. And once we get into these zones, we can start looking for our entries to short. We're not just putting in limit orders at the zone, because we can get nice tight stop losses and higher R2R trades. This was a trade we actually took. So we entered back in here. We had our stop above the high, and we ran that down. We're currently trailing this on the a Horiana candle, which I'll go through as well in a second. How we trail our stop loss. So we hit TP1, hit TP2, TP3 we hit for 5.46. I think we had 25x on this position. But at the moment, what I mean by trailing on the Horiana candle is I go onto the hour time frame. I put it on the Horiana candle. I open up my 20 EMA, which is this purple line. It's a little bit faint. Let me make that white so it's a little clearer. And I'll hold this trade I'll trail this trade until I get a blue Horiana candle like this one, like these three, or like this one, sorry. If I get a blue Horiana candle where the body closes above this 20 EMA, I'll close my trade out at that position. But for now, the Horiana candles are perfect. They remove the noise from the market. You might see a retracement, but it's weak. So we hold this trade until we get a close above this 20 EMA. That's our sign to close the full trade, and obviously look for more setups. But that's how we trail on the Horiana candles, staying below our 20 EMA on the hourly time frame. I think that's everything on our VeChain trade. We grabbed a few alts, ran a few alts down, which is good. I think we got a few that are about 250% currently, and we're like I said, we're holding on this Heikin Ashi. We do have these imbalances, so this imbalance got filled. That's where we got our little retest. But remembering we have on the 8-hour time frame, we have this. Sorry, the 4-hour time frame, we have this imbalance down here, and we have this imbalance all the way down here. So we could very well get some form of retracement back into our entry zone. Market could come back once we get a break of the structure down here. So what we're seeing at the moment is markets moving like this, might fill this imbalance, but we're continuing with this trade until we get a lower time frame break of structure there, before this might come up, mitigate out of a whale block here, or an unmitigated whale block, which would be this here. So we can very easily come up into this unmitigated whale block, which is the last buy to sell. As I said, it broke structure. So our whale blocks, strongest when they're unmitigated. It's unmitigated. Strongest with an imbalance filled to be an imbalance to be filled prior, which we also have here. Imbalance here that has to be filled, and we must have broken structure to be valid. And this broke structure just here, broke structure all the way down. So this is a very valid zone for a retest to then take another short position. So this is what we'll be monitoring. If we do get that lower time frame break of structure, we can scalp trade into this zone and then take our swing trade down. So that's what we do. We scalp the retracements if we need to, and then we run with the momentum of the market, swing trade it back down. So yeah, that's it, guys. Thanks for listening.